welcome to CEO.CA. My name is James Pettam, and today I'm joined by Ian McDonald, Executive Chairman and Director of Moon River Capital. They trade on the Toronto Venture Exchange under the ticker MOO, M-O-O. Ian, it's great to meet you.
Nice to be here, James.
So I'm wondering, for our viewers, if we could start off with the elevator pitch for Moon River. Tell us a bit more about the company.
Well, Moon River is a new company. We raised a small amount of money last year, $3 million. We've been trading under the symbol MOO for several years, but we only just acquired the asset, which is the Davidson Molybdenum deposit, last year. And it really is a best-in-class deposit. It's the highest grade deposit that I know of anywhere, and I do know them because we own this deposit in another company that I was the CEO of in 2004, and that was Blue Pearl Mining, which we ended up developing the Davidson and then purchasing Thompson Creek Metals, and the Davidson, it didn't get into production in that last cycle. But it was discovered in the 1950s, drilled off in the 1960s, and by AMAX or Climax, and that it is a truly high-grade, very large deposit. If you want to just imagine a solid deposit that's 2.5 kilometers wide and 2 kilometers high, that is the geometry of the ore body. And we're going to take out the sort of the high grade, the top 50 million tons, and it's worth about $100, just a little over $100 a ton right now, US, at today's prices. So it is a big project.
So we're going to talk a little bit more about the project and the molybdenum market as well. But maybe if we can just learn a little more about your experience, who else is on the team, and how did the formation of Moon River come about? How did you assemble the team that is currently in place?
Well, we have actually a fairly small team at this stage. Paul Perizzato, who I've known for 40 years, we decided to get into this together, which was just over a year ago. We also have on our board, it's a small board, five people, but Gordon Reed was previously. He's retired in 2019, but he was the chief operating officer for 11 years at Centerra Gold. They purchased Thompson Creek in about 2013. So he's very familiar with the asset, and he really likes it. As a matter of fact, that's when I asked him to come and join us, because I did know him in a previous life. He likes the asset enough to... This is the only board he's on. And the other person we have who's not on the board, but he's a special advisor, is Mark Wilson. He was the president of Thompson Creek until he retired about 2 years ago. And to fill out the board, Lorna McGilvery is our in-house counsel. She was in-house counsel for Thompson Creek for 10 years as well, from 2006 to 2016, more or less. And our CFO, Tong Yin, has a lot of experience with junior mining companies. Alice Murphy is the head of the audit committee. She was the CFO of Aber Diamonds. So we're all a little older, but we have quite a bit of experience in the business, and we have put mines into production. I've either been the chairman or the CEO of 5 mine constructions, either greenfields or brownfields. This will be a greenfields project. It's going to be an underground mine, and we'll have an underground mill, but it's new in that respect. It's never had any ore taken out and sold, but it's a very well-developed project. It had a feasibility done on it in the 1960s. Hatch did a feasibility in 2008, and we had another scoping study done in 2018. So we've had a lot of work done on it. It's had 71 kilometers of drilling. There's about 3 miles of underground workings. That was for development, pre-production, and underground drilling as well. So we know the project very, very well.
And so talking a bit more about that project, you put out some results this week, some results from the Davidson deposit. Can you tell us a bit more about the significance of those results and a bit more about what you found there?
Yeah, well, that's not something that it was a little bit of a surprise to us. That all happened just a couple of weeks ago, because we don't have to do any more drilling for assaying because, as I say, it's already had a couple of feasibilities done on it. But one of the big issues with molybdenum mines, because there's only 7 in the world, primary molybdenum mines, 75% of all molybdenum comes as a byproduct of other mines, mainly copper. But what happens is there's cycles for molybdenum, and when there's a down cycle, when the price goes down, sometimes the mine's got to shut down either temporarily or permanently because they just can't withstand it. And what this does to us, what that release yesterday says, is that we're going to be able to, we don't know how much exactly, but we're going to be able to recover many more minerals other than molybdenum. And they have there's no association or correlation with the molybdenum market. Molybdenum is a total proxy on industrial activity. The demand for molybdenum, which comes from thousands of different uses, but all to do with steel, has it just goes up 4.4% a year for the last 80 years, but it sometimes gets overwhelmed if there's 2 or 3 new copper mines that come on stream all at once and they're producing molybdenum. So the significance of that release yesterday is we have been working on a preliminary economic analysis that'll be released here in just a couple of weeks. But and these new elements that we've discovered, that will not be in that release. But what it will do, because they'll be in the sometime in the next few months, we will do the metallurgical testing we need to and find out just what recoveries we are, because that's about $50 a ton in gross value what we found. The molybdenum we're going to mine, and it's the highest grade, but it's about $100 a ton. So if we can get some percentage of those other minerals, mainly the tungsten, there's a little bit of copper, and these rare earths, as well as gallium. Gallium is something that not many people know about, and I got to say, I didn't know much about it till a year ago when China, they put a statement out that they will not allow molybdenum to be exported, not molybdenum, rather gallium, outside of the country. They announced that last July. But what it means is you have another source of income that's unrelated to the price of molybdenum. And so we don't know the exact numbers, but let's say our cost in the study is $10 a pound, for example, and we can add some more accretive co-products. We'll get that cost down. I don't know how far. We'll know shortly, but it's going to be very, very helpful.
Yeah, that's very interesting to hear, and I guess a good hedge against any fluctuations in price that you're able to produce other rare earth metals as well from this deposit. I mean, we touched a little on some of the dynamics of the molybdenum market, but can you tell us a bit more maybe about the growth case for it? Why is molybdenum a commodity that investors should be paying attention to, and what does the trajectory look like for a growing demand?
Well, like I said, it is a proxy on industrial activity. You can't build a car, or a tank, or a bridge, or a pipeline, or a boat, or a windmill, a solar panel without molybdenum. In 1950, the world needed 29 million pounds of molybdenum. Don't forget, they've only the first molybdenum mine in the world, which was the Climax mine, which was it was the biggest mine of any kind in the world for 50 years. It was the first mine to ever do 50,000 tons a day from underground, but it only went into production in 1917. So by 1950, we needed 29 million pounds. In 2022, because that's the last year we have official numbers for, the world demand was 620 million pounds. By 2030, it's going to be well over 800 million pounds per year. And what we ask is, where's it all going to come from? If you just look at the pipeline, it's on our website in our presentation. The top 28 new copper mines coming on stream, only a few of them have molybdenum, and those are quite a few years away. So I think the supply-demand dynamics look good. One thing you have to realize is the supply and the demand are totally inelastic, because the people that buy molybdenum, they don't need very much. Like a pipeline's got 0.3%. A German tank has maybe 0.7%. It's just not going to be the reason you don't build anything. A car's got about a pound of molybdenum in it. An electric car's got about 4 pounds of molybdenum because they need a stronger frame. But the point is, the price doesn't really, they prefer a lower price, but it doesn't really matter. It won't be the decision on whether you build a new ship or a new bridge because the amount used is so small. Conversely, on the supply side, 75% or so comes from byproduct, copper mines. Well, they don't really care what the price is either because it's going to be a byproduct. They've already mined the ore to get the, say, copper, for example, out. And once you, you mine it, you crush it, you grind it, you float it, it's not much of an incremental cost to take out the other co-products, silver or in this case, molybdenum. So that's the dynamics of the market. But we say that by 2050, we're going to need but somewhere between 1 and 1.5 billion pounds a year. It just seems unlikely that we're going to be able to supply that.
Yeah, very interesting, and especially hearing about those dynamics of supply and demand that companies who end up being molybdenum producers could be quite well positioned in the event of a price increase, given that demand may not level off accordingly. So I guess looking ahead for 2024, could you give us an overview of what to expect from Moon River? What operational updates and what news flow will there be?
Yeah, well, there's a few things I can't talk about, but what I can talk about is what we're going to have here in the next few weeks is the engineering study, the preliminary economic analysis. But like I say, this is a advanced project because we know it so well and it's had so much work done on it. It was prepared for production in 1971. It was all ready to go, and then they decided to build another one. So that'll come out. It will not include these other metals that we announced yesterday, because what we need to do is, we don't have enough information. We have the assays, but what we need to do is some metallurgical testing, because all the drill core we have is either the newest we have is the core we drilled in 2006 when Blue Pearl owned it. That's when I was the chairman of the company. And we did about 50,000 meters of drilling. It's had just over 200,000 meters in total. So we did about a quarter of it. But it doesn't need any more drilling. But we'll have the PEA out, and we will have to do, we're going to drill, I don't know how many, 10 or 12 holes here in the next couple of months. And what that's for, metallurgical testing, because the ore that was drilled, in the holes that were drilled in the 50s, 60s, and even in the 2006, the ore gets oxidized. It won't change the assays appreciably, maybe 5% up or down, but it could change the recoveries because you need fresh ore. It's a sulfide, and you need to have fresh ore. I might mention, by the way, even though it's a sulfide ore, it produces no acid rock drainage. It is just ever so slightly on the basic side. So that's a plus when you're building a mine these days. But that's going to happen, and then we'll have that. I'll have the PEA done here in the next few weeks. We will have the metallurgical testing done in the next few months, and then we're going to start. Well, at the same time, we're going to start a final feasibility. Because what we've done is we've changed the parameters of the mine, and you'll see from the what we put out in a couple of weeks, it's going to be a underground mine, more or less around 7,000 tons a day, all electric. I don't even think we're going to need a tailings dam outside because all the waste will be used as a paste backfill. We'll put a little cement factory underground, and then the other thing is we'll need to hire up. We do not have a chief operating officer in our company, for example. So we will have to do some hires, and we want to start that feasibility. That's going to take, I don't know how long it's going to take, but it's going to take at least a year. But one of the main things this year is the confirmation of what these new assays on these new elements are going to be, and what kind of recoveries we can expect. And we're going to be working closely with the, I believe, the Saskatchewan Research Council. That's a Crown corporation that has just built North America's first recovery facility for rare earths. Right now, all the rare earths that are produced, they go to China for processing. So we're not going to have to do that. So there'll be quite a few things happening this year. And then I would say next year, it'll be a feasibility, and the results will be announced, and then financing for construction. We won't be constructing next year, but we should have the feasibility done in 2025.
Well, Ian, sounds like there's a lot in store, and it's an exciting time to start paying attention to the work being done at Moon River. Thank you so much for joining us today.
All right, thank you. Thanks very much. Bye now.